They're not talking about ending the dollar anymore. They are actively building the system designed to replace it. And this is not some distant theoretical threat. The system is already operational right now. On January 15th, 2026, the BRICS nations officially launched the unit, a new settlement currency for international trade, backed 40% by physical gold and 60% by a basket of BRICS national currencies. This is not a proposal. This is not a white paper. This is not academics debating monetary theory. This is a live functioning alternative to the US dollar system that has already gone operational for countries representing nearly half of the world's population. And if you don't understand what this means, if you don't understand the mathematical inevitability of what happens when the dollar loses its monopoly, you are about to see your standard of living collapse in ways that will make 2008 look like a minor correction. In the next 25 minutes, I'm going to show you exactly how de-dollarization works, why it is accelerating faster than anyone predicted, and what it means for your savings, your investments, and your financial future. Because what is happening right now is not a competition between currencies. It is the systematic dismantling of the economic structure that has allowed the United States to live beyond its means for 80 years. And when that structure breaks, everything changes. Let's start with the foundation so you understand what is actually at stake. The US dollar became the world's reserve currency in 1944 at the Bretton Woods conference. Every major currency was pegged to the dollar, and the dollar itself was pegged to gold at $35 per ounce. Most importantly, international trade, especially oil, was conducted in US dollars. This created what economists call the exorbitant privilege. Here's what that means in practical terms. Because the world needs dollars to trade, there is constant global demand for US currency. That demand allows the United States to run massive trade deficits, importing far more than it exports year after year, decade after decade, without facing the normal consequences. The United States can print dollars and the world accepts them as payment for real goods, oil, electronics, cars, food, and manufactured products. America gets real value, the rest of the world gets currency that was created digitally. And because central banks around the world need dollar reserves to participate in global trade, they buy US Treasury bonds. That creates artificial demand for US government debt and allows America to borrow at lower interest rates than almost any other country on earth. The exorbitant privilege means the United States can run an $800 billion trade deficit every single year without triggering a currency crisis. It means trillion-dollar budget deficits can continue without immediate consequences. It allows American consumers to buy cheap imported goods while government debt rises to $38 trillion. This has been the foundation of American prosperity for the last 80 years. Not innovation alone, not productivity alone, not free markets alone, but control over the global reserve currency. And that monopoly is ending. Not 10 years from now, not 5 years from now. It is ending right now, in 2026. Here's what has changed in just the last 60 days. I'm Tao. That accelerates everything. January 2026, BRICS officially launches the unit currency system. It's operational. Live transactions are being settled. Russia and India trade oil in units. China and Brazil settle agricultural commodities in units. Saudi Arabia and China are negotiating oil contracts denominating units instead of dollars. This is the alternative system going live. January 2026, Saudi Arabia, the linchpin of the petrodollar system since 1974, joins BRICS formally. The petrodollar agreement, the deal where Saudi Arabia agreed to price oil exclusively in dollars in exchange for US military protection, has been effectively dead since mid-2024. Saudi Arabia joining BRICS and beginning to settle oil trades in UAN and potentially units is the final nail in the coffin. The petrodollar is over. January 2026, China's holdings of US Treasury bonds dropped to $680 billion, the lowest level since 2008. They've sold over $600 billion in US debt in the last decade. They are actively exiting. Russia sold virtually all of their US Treasury holdings after the 2022 sanctions, going from $150 billion to under $10 billion. They don't want dollars, they don't trust dollars, and they are building alternatives. Let me show you the math of what happens when the dollar loses its monopoly. This isn't abstract economics. This is your life. Right now, the United States runs an $800 billion annual trade deficit. We import $3.8 trillion in goods and services. We export $3 trillion. We consume $800 billion more than we produce every single year. How do we get away with this without our currency collapsing? Because foreign countries need dollars for trade, so they accept our paper currency in exchange for real goods. Chinese factories send us electronics, we send them dollars. Saudi Arabia sends us oil, we send them dollars. Germany sends us cars, we send them dollars. And because they need dollars to trade with each other, they accept this arrangement. But what happens when they don't need dollars anymore? What happens when China can buy Saudi oil with yuan or units? When Russia can sell natural gas to India in rupees? When Brazil can sell soybeans to China in yuan? When the BRICS nations, representing 46% of the global population and $28 trillion in combined GDP, conduct trade without touching dollars, the demand for dollars collapses. And when demand for dollars collapses, the value of the dollar collapses. Here's the cascade that follows. Dollar devaluation. If the dollar loses 30% of its value against other currencies, everything we import becomes 30% more expensive overnight. Government insolvency. The US currently pays $1.2 to $2 trillion per year in interest on $38 trillion in debt at an average rate around 3%. If rates rise to 7% as debt is refinanced at higher yields, the interest expense jumps to $2.6 trillion per year. That's more than all tax revenue from individual income taxes. The budget becomes mathematically impossible. You cannot cut spending enough, you cannot raise taxes enough. The only option is money printing, which accelerates inflation, which weakens the dollar further, which requires more money printing. It's a death spiral. Standard of living collapse. The American middle class standard of living is built on cheap imports and cheap debt. When imports become expensive and debt becomes expensive, the standard of living collapses. Your salary might go up 5%, but prices rise 20%, 30%, even 40%. Your purchasing power evaporates. Everything feels twice as expensive because it is. Retirement savings are destroyed by inflation. The comfortable middle-class life you expected becomes unaffordable. This is not hyperbole. This is not doom porn. This is the mathematical consequence of losing reserve currency status. And we can see it happening in real time. The BRICS unit system is the infrastructure. It's built. It's operational. Now it's about adoption. How fast do countries switch from dollar-based trade to unit-based, UAN-based, or rupee-based trade? Let's look at the adoption curve and why it's accelerating faster than anyone expected. Stage 1, rejection, 2014 to 2020. Russia, China, and a few others started discussing alternatives to the dollar. Mostly talk, some bilateral agreements. Russia and China settled some trade in local currencies, but the volume was small. Western economists dismissed it entirely. The dollar is eternal. There's no alternative. BRICS is a joke. Stage 2, construction, 2020 to 2024. Serious infrastructure building. China launches CIPC, the cross-border interbank payment system, as an alternative to SWIFT. Russia develops SPFS, their financial messaging system. India internationalizes UPI, their payment interface. BRICS nations coordinate on gold purchases, buying over 1,100 tons per year for 3 consecutive years. They are building the rails for an alternative system. Stage 3, operational launch, 2025 to 2026. The unit currency goes live in January 2026. Saudi Arabia joins BRICS. Oil trade starts settling in non-dollar currencies at scale. We're here. This is happening now. Stage 4, critical mass, 2026 to 2028 estimated. This is when enough countries join and enough trade volume shifts, so the system becomes self-sustaining and the dollar loses its monopoly permanently. We're 12 to 24 months away from this point, based on current adoption rates. Let's look at the adoption data that proves this is accelerating. Russia and China, 90% of bilateral trade is now settled in rubles. $0, that's over $200 billion in annual trade completely outside the dollar system. India and Russia, India is buying Russian oil and paying in rupees and UAE dirhams, bypassing dollars entirely. China and Saudi Arabia, China is buying Saudi oil and paying in yuan. This is the petrodollar system dying in real time. BRICS expansion, 23 countries have formally applied to join BRICS. These are not fringe economies. These are major players: Indonesia, Turkey, Egypt, Mexico, Saudi Arabia, UAE, Iran, Nigeria, Thailand. These are large, strategically important economies that want alternatives to dollar dependency. The network effect is critical here. Every country that joins makes the system more valuable for everyone else. When it was just 5 BRICS nations, it was limited. Now it's 10 plus, with 23 more applying. Soon it could be 30 plus nations representing over 60% of the global population and 45% of global GDP. At that scale, the system doesn't need the dollar at all for intra-BRICS trade. And intra-BRICS trade is massive and growing. They trade oil, gas, food, minerals, manufactured goods, electronics, everything. If all of that shifts out of dollars, we're talking about $10+ trillion in annual trade that no longer requires dollars. That's the demand destruction that collapses the exorbitant privilege. Now, let me address the counter-argument because I know what you're thinking. The dollar's too entrenched. Everyone uses it. The financial infrastructure is built on it. SWIFT processes 42 million messages per day. You can't just replace that overnight. This will take decades if it happens at all. You'd be wrong. It's not about replacing the dollar overnight globally. It's about creating a parallel system that's good enough for non-Western countries to opt into. Once that parallel system reaches critical mass, the dollar doesn't need to go to zero. It just needs to lose its monopoly. Here's the historical precedent. The British pound was the world's reserve currency for over a century. At its peak, 2/3 of global trade was denominated in pounds. Britain controlled a quarter of the world's landmass and 23% of the global population. The pound was eternal, unshakable, backed by the most powerful empire on earth. Then World War I happened. Britain borrowed massively to fund the war. The pound weakened. The US offered better terms on loans and had more gold reserves. By 1944, at Bretton Woods, the dollar officially replaced the pound. It took less than 30 years for the pound to go from dominant global currency to a regional currency. Britain didn't collapse, the pound didn't go to zero, but Britain lost the exorbitant privilege, and the economic consequences were devastating. Post-war Britain faced decades of austerity, currency crises, and declining living standards. The same pattern is happening now, just faster, because technology accelerates everything. SWIFT took decades to build, CAPES was built in 5 years, the petrodollar took 30 years to fully establish after Bretton Woods. The BRICS unit system went from concept to operational in under 3 years. The timeline is compressing, and the US is making every single mistake that accelerates de-dollarization. Weaponizing the dollar, sanctions on Russia froze $300 billion in reserves. That showed every country on earth that dollar reserves can be confiscated if you cross Washington. China watched, India watched, Saudi Arabia watched, and they all started building alternatives. Weaponizing SWIFT, cutting Russia from SWIFT, showed that the payment system itself is a weapon. So countries built alternatives: CIPS, SPFS. BRICS, pay, freezing Afghanistan's central bank reserves. $7 billion in Afghan reserves were frozen after the Taliban takeover. That money belonged to the Afghan people. The US froze it. Every developing nation saw that and realized their reserves aren't safe. Unsustainable debt, $38 trillion in debt, $2 trillion annual deficits, $1.2 trillion in interest payments. The math doesn't work. Foreign creditors see this and don't want to hold dollars long term. Every time the US weaponizes the financial system, it creates fear, and fear drives countries to build alternatives faster. We're forcing de-dollarization through our own actions. So what does the timeline look like? What are the specific milestones that tell you this is accelerating to the point of no return? 2026 Q2, watch BRICS unit trading volume. If it reaches $500 billion in quarterly settlements, that's proof of serious adoption. 2026 Q3, watch for major oil contracts denominated in units or yuan. If Saudi Arabia announces a long-term oil supply contract with China priced in yuan or units, that's the petrodollar officially dead. 2027, watch for the BRICS expansion summit. If 10+ new countries join formally, bringing total membership to 20+ nations, that's critical mass approaching. 2027 to 2028, watch the dollar's share of global reserves. It's currently 58%, down from 71% in 2000. If it drops below 50%, that's the psychological tipping point where the dollar is no longer the majority reserve currency. What do you actually do with this information? How do you position for a world where the dollar is no longer the monopoly reserve currency? First, reduce dollar-only exposure. If 100% of your assets are denominated in dollars, US stocks, US bonds, US cash, you are massively exposed to dollar devaluation. Diversify into hard assets that hold value regardless of currency: physical gold, physical silver, Bitcoin. If you understand the volatility and risks, diversify into foreign assets, international stocks, especially in countries that benefit from de-dollarization, like China, India, Brazil, commodity exporters, real assets, real estate, strong local markets, commodities, energy infrastructure, anything that produces real value regardless of currency fluctuations. Second, Understand the sectors that get destroyed versus the sectors that survive. Destroyed: financial services, heavily dependent on dollar dominance. US Treasury bonds if foreign buyers disappear. Import-dependent retailers if the dollar weakens and imports become expensive. High-debt companies that can't refinance if rates spike. Survive or thrive: energy companies. Oil and gas demand doesn't disappear. Exporters: US companies that sell globally benefit from a weaker dollar. Commodity producers: gold, silver, agricultural, critical minerals. Companies with pricing power: Apple, Microsoft, Google, Coca-Cola. Companies that can raise prices and maintain margins. Third, watch the indicators that show this is accelerating. US 10-year Treasury yield above 5.5% signals foreign buyers are disappearing. Dollar index, DXY, breaking below 95 signals, sustained dollar weakness. Gold breaking $5,000 per ounce signals a global flight from fiat currencies. BRICS unit trading volume above $1 trillion, quarterly signals the alternative system is working at scale. The bottom line is this: de-dollarization is not a future threat. It's a current reality that's accelerating. The BRICS unit is operational. The petrodollar is dead. Foreign central banks are selling treasuries and buying gold. The alternative infrastructure is built and functioning. The timeline to critical mass is 12 to 36 months, not decades. The dollar won't go to zero, but it will lose its monopoly. And when it does, the exorbitant privilege ends. America will have to pay for imports with real value, not printed paper. The government will have to fund deficits at market rates, not subsidized rates. And the American standard of living will adjust downward to match actual productivity, not monetary privilege. This is the great reset that nobody in Washington wants to admit is coming. But the math doesn't care about politics, and the math says de-dollarization is inevitable and accelerating. If this analysis showed you what's actually happening behind the headlines, subscribe and hit notifications. The next video covers the specific assets that survive currency transitions and the historical playbook from every previous reserve currency collapse. You need to see it. Stay informed, stay prepared, and understand that the world you grew up in, where the dollar was king, is ending. What comes next will look very different.